Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this was a wild day. It is Thursday, the 17th of June, 2021. Well, the market had many reactions, but the first thing that happened is the curve yield went bonkers. The back end started losing yield, and I'm talking the 10 and the 30, and the front end came up because what the Fed said affects the front end. You know, if they take their foot off the throttle, that lets go of the real short-term rates up to the 5-year, and that got its pop. Now, we saw the commodity markets go into a tailspin. This is one of the largest decline days on record. We saw limit down in soybeans. We're talking almost $1 a bushel down today. And we're going to have expanded limits tomorrow. We saw the energy markets give things up. The metals fell apart. So the idea that a higher dollar off of that drops those, but what does it accomplish for the Fed? Because now your commodity inflation has been deflated. Copper down 21 cents a pound today. These are not normal moves. I'm a commodity trader. These are not normal by any stretch. But what did get a bid is ARK. So those 5 stocks that she loves, those FANGs, keep coming up. The market's looking good here. The pattern is one of a lower low and a higher high. The market's been fighting. You can see where. The 200-day moving average of closes. I think I nailed that. And what's the other number that's going to give this market some heartache right now? It's going to be the upper Bollinger Band. It was there before, and you hit it and you stopped at it again. Now, there's no magic to this. If it wants to pop through it, it'll do so, and then your next round of resistance is 123.71. When I put momentum on, though, I have an overbought market, or at least the market looks that way to me. You have a market that keeps coming up to these numbers and failing at them, and will overbought attract more investors? That is the problem that the market faces. When we look at European stocks, they got smashed today. That's the only word you can say, almost down a full percentage point. The market stepped out of the uptrend that it had. You can see this. You had one. And what was the embedded reading yesterday? Fully there. You completely lost the reading today. So what happened is higher U.S. rates. Will Europe follow us? Most likely not. They're going to play the game longer. They were hoping U.S. wouldn't take their foot off the throttle in any manner, and then if they nudged theirs, they would have attracted the buying. Now the question is what goes on there. In PAVE, there's something like 20 senators got together today, and it is a bipartisan group, and they have a plan for President Biden. Unfortunately, it's about $1 trillion. He wants 1.7. I don't see them getting together. So while the press says, well, it's here, I have a feeling still, and I've mentioned to you that the Democrats are going to have to go it alone. The market's sort of agreeing with me on this right now. And you can see you broke out under the lower Bollinger Band. Now, you don't stay under that more than 5% of the time. So somewhere between here and the 100-day average of closes, I'm going to look for the support in that market. Again, similar to what we saw in ARK, this is the flip-flop. It is oversold. AMC, in fact, in the aftermarket, I was watching it up another $1.50 or so from here. Staying up, still in an uptrend. Getting under this 51.86 would be a problem for the market, but as I said, it's knocking on the door. It's not quite to 64.71 in the aftermarket, but up again. And I'm looking at the market in a momentum that is not, the word is not saying come buy me. It is overbought. Any reading over 70 is that way. Trend up, overbought. If the meme people want to run this thing, 75.12, the upper Bollinger Band, is an upside target. In XSD, which is the semiconductor, well, there's more plans coming out of the Senate. Now they want to throw a massive amount of tax credits to the companies that will do this. So the first thing we got was a big package out of the Senate to fund semiconductor factories in America. Now we're getting a tax plan with it. None of this has quite made it through. In fact, hasn't gone to the House for a vote in any manner yet, but these bills are passing in the Senate, so that'll show up sooner rather than later. And when you take a look at what's going on since 1990, is it? You know, we used to, in this country, make about 35 or so percent of our own semiconductors. I think we make 12% today in America. That is not what you want to do. You don't want to be at the mercy of China. It's that simple. And that's what you're doing by putting yourself there. So there are Taiwanese companies coming here, but we don't consider Taiwan China. That's just how it seems to be in America. China claims it's, of course, part of China. Whatever the case may be, that's where you're at this point in time. Again, I got that twice there, Pave. Now I see what I did wrong. I keep saying I'll fix it, and I didn't. Higher high, lower low, stuck at the 18-day average. No trend as I see it in the SGU. XLE, the trend is down. You're getting your correction in the energies. And today showed that. You fell about $2 in the crude intraday at points. You don't have your upside momentum. Let the market correct back a bit. It's a commodity. You know, all the other commodities fell. Maybe this one will fall a bit too. Here's your EFA. Remember we were talking. I said if U.S. rates are going up yesterday, this market's going nowhere. Fell right down to the lower Bollinger Band. This market needs falling interest rates from the U.S., not rising. Now, eventually it'll get past that, but just dealing with the shock, I guess that's how traders are taking it, of the idea the Fed is talking about raising interest rates. That's enough for people to go from A to Z. The Fed's going to raise rates. Okay. Gold, look at how this worked when the dollar took off today. You just smashed the heck out of it. I was right in the analysis that if you came down in this market through back here, remember we were talking, that had the market roll. I was looking for support originally between the lower Bollinger Band and the 200-day average, and I got it. Then yesterday, I take that back. Then Tuesday said if it wants to go even lower, maybe you're going to the 100-day. That's a logical thing. It's fighting to get back into the Bollinger Band. Then you get yesterday's action. And then last night I explained to you as best as I knew how the yin-yang impact that happens when we have an FOMC meeting that takes place at 1 o'clock Chicago time with the statement. Then 1:30, they begin a press conference that goes to 2:20, and I laid out what time is that in Asia. You know the European markets are already closed because that's, depending if it's a 5-6 hour time difference, they're all shut down for all purposes. And you go around, and by the time you get back to America, you can either have a rethinking of that, you're going the other way, just a study confirmation, or a panic. You don't know what's going to happen. Well, I'll show you what happened. You got into a panic. You had a sharp gap lower, boom, this market just literally fell apart. Does that explain it? Gold miners, same thing. TLT. This is almost funny. Here's a market with an outside day to the downside, and this is after yesterday. And you would think that interest rates going higher, this would impact this market in a negative manner. But if you take out the high of what? An outside day down. I've taught you this over and over. My target, doesn't mean I'm right, is going to be the closest moving average above the market or the upper Bollinger Band. I feel good with it. Went through it, closed literally right on it. FXE, I'll let this all finish up here. How could this withstand the pressure of what went on? But you didn't need that. You already were in a bear trend as of Tuesday. And the market had a problem. Oversold generally doesn't get the attraction, but was I not telling you? I think the smartest thing traders can do when you're getting a meeting that the market has decided is a very important one, not me, but the marketplace, you walk away from these. The odds of catching the trades the right way, difficult at best. Came down, and then overnight, now the traders go, what does that mean? Boom. That's what it means. You know, I talk about what I teach, and this is my charting course. It's summertime. Why not avail yourself of it? So if you take a look at this, it's 52 chapters. I teach you the swing lines. I start off with a PowerPoint in the videos. Then I walk you how to draw them by hand. Moving averages, all the ones, the way I use them, the ones I think are important. The secrets of slow stochastics to learn the basics. Then my enhanced Bollinger Band course will kick in after that. Bollinger Bands, my way of doing it, which is very different than everybody else's. Window envelopes, which is a standard deviation from the 18-day average. It's support and resistance points. 8 hours of videos. It's not a race. You take your time with it. You get the charting software that follows exactly what I do. I give you my daily research. I throw in the whole package so that I'm reinforcing you. Each day you're going to look at the morning video. You're going to learn what's going on, and you take it from there. People that take it, I've had a lot of comments. If I put out a new enhanced course, we sell a ton of them because people want to pick up those parts. Just go to our website. It's all explained there at www.iraepstein.com under the word education. I give you a quick look at what things look like there. It's inexpensive, $249 for the whole course. You get the charting software, that's a $50, $60 value by itself. Access for the 30 days to my full research package, another $60 of value. And then you get the course with all the videos. I think it's a neat package. You have a great day. Talk to you later.